Hi, this is Ian Coleman from PIA-First. This is this week's FX video analysis for the week 4th of June 2018. As always, we're going to start off with the dollar index, break down through the time frames in all the different currency pairs and highlight what levels and what formations we're seeing this week. We're expecting pretty mixed and volatile trading. There's not a lot on the docket with regards to scheduled news releases. We've got RBA, Royal Bank of Australia, meeting on Tuesday, and then on Thursday we've got the Euro GDP figures. So they're the only real sort of scheduled market movers. Never say never in the markets. We might end up with a news bomb at some point, but the charts really highlight that we're in corrective sequences now. So we're expecting some pretty mixed and volatile trading going into this week. So to the charts, the first chart is the dollar index DXY, the basket. We're looking at the monthly chart. Here we can see that we've been in a large bullish channel formation for some time. Not really a lot to take away from this time frame. We've broken the Ishimoku cloud to the upside. 93.07 comes in as support. If we break down to the weekly chart, however, here we can see an impulse wave as far as Elliott wave is concerned, down to the lows. Then we had what we call a TD flip here on week 16th of April, and then we've moved to the upside. The Ishimoku cloud, or levels inside the Ishimoku cloud, are stalling gains in the dollar index. And we've seen a doji style candle posted on the weekly chart. That often highlights the top of a trend. If we get a close this week below this level, which is around about 93.66, then we will form a evening star formation and look for deeper losses. Obviously this area has been quite pivotal, beginning of November of 2017, and then if we look back here, levels through 2016. So there is scope for a correction to the downside. The long-term bias, we still believe, is for a move towards here, 96 the figure. So we're looking for a dip and then basically a rally higher in the dollar index. And here we can see that's explained a little bit better. So just to highlight our bespoke support levels going into this week, we've got bespoke support at 93.49. So the scope for a little bounce early on in the week with the dollar getting a little bit of strength, but then we're looking for a stronger move to the downside, and we actually believe that we're going to see a move to 92.09, which is then our second bespoke support. Bids around here should return. Possible bullish head and shoulders formation, so left shoulder, neckline, head, neckline again, and then down to form this right shoulder before we move higher. So as I said, expect mixed volatile trading, especially at the beginning of the week, but the bias now is flipped mildly for lower dollars, basically going into this week. So reflecting that back onto our currency pairs, the first one is euro dollar. We're going to break down the time frames quickly and move through these different currencies. So euro dollar monthly, obviously the opposite of the dollar index. We're in a large bearish channel formation. Levels close to the 38.2% pullback of 125.22 found sellers. When we go to the weekly chart, we've got a wedge formation breakout, impulse move to the downside. Levels close to the previous swing low found buyers. DMARC posted a 13 count on the weekly chart. That often highlights the end of a trend, or at least a correction to the upside. And obviously we've got the 261.8% extension level at 114.90. Now our bespoke resistance, first one is at 117.82, so that'll probably just line up with that dollar move, the first dollar move, but then our main resistance level is here, which is 119.90. So we're expecting a choppy move, especially while we hold within the Ishimoku cloud to the upside. Now, if we break that down to a closer view here on the weekly chart, this is what we think is going to happen. So again, left shoulder, head, and then we're going to move higher in this choppy formation to form a right shoulder around about 119.90, like we said, which is close to this 50% pullback level, and then we expect the move again to start to go lower in euro dollar. On Friday, we actually clipped a long trade at 116.30 medium term. Again, this is a reverse head and shoulders this time, so left shoulder, head, right shoulder, and now our medium term bias is bullish, and we're looking for that correction higher. So sterling dollar monthly chart highlights a bearish outside candle. We've got some reverse trendline support. Let's just move that down actually, just a bit lower, coming in at 127.56, and that's quite an important level when we go to a longer term outlook for cable. The weekly chart, we've got a bearish outside candle from the high. We've moved down. The Ishimoku cloud has stalled selling, and we've regained all of the initial losses from last week. Bespoke resistance is located at 136.27, a break there, and then we've got reverse trend line resistance at around about 138.40. Now, if we break down to the daily chart, here we can see an impulse move to the downside. So 1, 2, 3, 4. Have we completed wave 5 yet? It's difficult to say, and even sort of intraday charts aren't highlighting an exhaustion really in cable. 131.76 is the 261.8% extension, and we've actually got a buy trigger in at 131.80 at the moment, which we're moving away from. To the upside, we've got the previous swing low here, which is 137.11, and that's from the 1st of March. We've got our bespoke resistance here, which is at 136.75, and then we've got the 38.2% pullback of the current sell-off located at 136.52. So we're looking for this area to be very strong to the upside and to stall buying in this currency. Going back to that long-term outlook that we were talking about, so 127.56 was the reverse trend line support. If we go to this weekly chart, that is close to the 61.8% pullback of this rally. So in other words, the move up getting capped, and then the second or third wave, I should say, down to complete this medium-term signal. So at the moment, we're mildly bullish up to resistance, and then we're expecting sellers to return and a move lower towards the 61.8% pullback level. The reason that we say that we haven't really seen much of a reversal formation in cable yet, we've got no bullish outside bars, no reverse doji formations, and yes, we're now seeing higher highs and higher lows, but again, there's no real reversal formation in this currency pair. 134.52 is our first bespoke resistant level going into next week, and that is close to the 161.8% extension. So this is what we're going to monitor at the beginning of the week to see whether or not we get a move to the downside, potentially a reverse head and shoulders pattern. So this would be the left shoulder, head, and then this be the right shoulder before we'll look to adjust our medium-term buy trigger. Okay, excuse me. Dollar Swiss. Here we've got some pretty mixed volatile price action. Obviously the rally has stalled close to the previous swing high, And we're seeing this correction to the downside. There's a Marubozu level coming in around about 97.18 from this strong bullish candle that was posted in April of this year. Long-term outlook is for a move here towards the top of the wedge formation, around about 106 the figure, and we've got bespoke resistance coming in at 106.70, so quite a good confluence area for a long-term bullish outlook in dollar Swiss. The weekly chart highlights a DMARC 13, and then we've moved to the downside. We have held the reverse trendline support at the moment. We've got some bespoke support coming in at 98.17. Now there is scope for a deeper correction to the downside, and that's highlighted on the daily chart. So we're actually between bespoke resistance and bespoke support at the moment, 99.32, 98 the figure, so we're expecting some sort of choppy price action, but we're not looking for sustained losses below sort of 97.50, which is this trendline support. Now, normally, if we're bullish in euro dollar, we'll be bearish in dollar Swiss. But I'm just going to show you the cross quickly because that actually highlights a move higher in euro Swiss. So we can be bullish in euro dollar and we can be mildly bullish in dollar Swiss as this corrective formation completes. So the monthly chart highlights a bearish outside, well, sorry, not a bearish outside candle. It highlights a strong sell-off that offers a Marubozu, which is the midpoint from open and close, around about 117.40. Now, if we go to the daily chart, here we can see 5 waves completed to the downside, and then this corrective, or what we believe will be a corrective move higher. Now, we've got trendline resistance located around about 117.30. That's near the Marubozu, and it's also near our bespoke resistance at 117.38. So a corrective move higher in euro Swiss next week, but then looking to sell into that potential rally. So moving on, dollar yen. The monthly chart is pretty mixed. We've got the potential head and shoulders formation, so left shoulder, head, right shoulder, needs to see a break of 127.42 to confirm. Mixed volatile trading to the downside. Again, not a great deal we can take away from this time frame at the moment. The weekly chart, here we can see a large channel formation. Trend line resistance is going to be coming in around about 112.30. Bearish outside candle posted not last week but the week before. This often indicates the top of a trend. However, the dip has been bought into, so it's sort of mixing this view at the moment. It's not until we break down into shorter time frames that we can really see what's going on. So the daily chart moved higher in an Elliott wave formation, bullish Elliott wave formation. Levels close to the 261.8% extension. Found sellers, but we've stalled to the downside at this trendline support. Now, the reason I've highlighted this level here, 109.44, is our bespoke resistance, and we have closed the week below that level. So at the moment, the bias is still mildly bearish, and it's not until we go to the intraday chart that we can see the potential for a head and shoulders pattern. So left shoulder, head, right shoulder, a break of this low or this trend of lower lows, which is around about 107.90, and we're going to look to get short of dollar yen next week. Dollar CAD monthly chart highlights a bullish descending triangle formation. For the last 3 months, we can see spikes in all directions, highlighting indecision. The weekly chart highlights this formation a little bit better. A doji style candle posted last week. Trend line resistance coming in at 130.83. Now it's not until we break down into this time frame, it looks quite complicated because the moves in dollar CAD have been complicated lately, and we're looking for a stronger move to the downside as a corrective formation before buyers return. So here we've got 1, 2, 3, 4, 5 bullish wave to the upside. Corrective waves are normally in three wave formations. So 1, 2, 3, 1, 2, 3, and then down here could be 5 waves, could be 3 waves. This move lower. An ABCD formation is located at 124.55. Bespoke support is 128.33. So again, looking for this sort of zone for the sell-off in dollar CAD to stall and possibly reverse. Aussie dollar monthly chart, large expanding wedge formation, has an eventual bias to break to the downside. Very mixed and volatile trading since the beginning of 2016. The weekly chart highlights a wedge breakout. The measured move target is down here, which is 68.30. 161.8% extension level has stalled the sell-off. DMARC posted a 13 count, and we started to move to the upside. Now we've got Ishimoku cloud resistance coming in at 76.40. We've then got the reverse trendline resistance at 76.64. So that area is prime for a stall in bullish price action this week. And if we go to the daily chart, here's what we're expecting to see. We're quite lucky to get a move to the downside on Friday that triggered our intraday trade around about 75.20, which was our bespoke support. But again, corrective formation ABC, trend line resistance coming in around about 76.37. But obviously, as the week moves on, that trend line resistance will move higher, possibly up to 76.46, which is extremely close to our bespoke resistance and where we're going to look to get short again in Aussie dollar. Euro sterling continues to be extremely hard to analyze and forecast and really get even intraday trade ideas correct at the moment. We believe we're in a wedge formation that has an eventual bias to break to the downside on the monthly chart. Weekly chart highlights levels at the Ishimoku cloud continue to get sold into. Yes, we have got a bearish outside candle last week, but these aren't as strong as when they're at the top of a trend. And in fact, the daily chart, we can see that the sell-off stalled on Friday at 87.32, which is our bespoke support. There is scope for a spike through that level at the beginning of the week because that's actually a monthly bespoke support. So as long as it holds at the end of the month, and obviously we're now at the start of the month, then it's regarded as solid. One interesting factor here is an A, B, C, D formation from the base of the channel at the beginning of the week, which is around about 86.74, would take us up to the 78.6% pullback level at 88.94, and then form a potential Gartley pattern to take this cross currency lower. So at the moment, pretty mixed. We'll be monitoring this level for a reaction to the upside. So to finish up, Euro Yen, bearish outside monthly candle, Marubozu, which is the midpoint from open and close, held at 132.76. We're now inside the cloud and expect trading to be mixed and volatile. The weekly chart, we are looking for an eventual move to the downside to around about 115.13, which is close to a previous swing high. Excuse me. Majority of last week's initial losses were recaptured. Important factor here, 129, the figure, which is our bespoke resistance, is also the previous swing low, and we believe will be pretty solid resistance going into this week. However, let's just go to the intraday chart. Our first bespoke resistance is at 128.43, so we're gonna monitor price action. If we get a move to the downside from that level, and it stalls around about 126.54, then we're likely to call that sell trade off, because that again will be a reverse head and shoulders formation. I think yen crosses this week are going to be pretty mixed and volatile, and I also think the indices are going to be intraday on an intraday bias, pretty hard to predict. Okay, I hope you found that informative and educational. It's great to speak to you, and I hope to speak to you again soon. Thank you.